Welcome back to another episode of Bias and Money, where we break down real financial events and the psychological mistakes behind them.
Bitcoin didn't just move this week. Something far more important did. Not the price, not the chart. The story around Bitcoin just changed, and most people didn't notice. And when narratives shift before the crowd understands them, that's when fortunes are made or destroyed. Bitcoin has always lived in uncertainty, volatility, speculation, booms, and brutal crashes. For over a decade, its biggest enemy wasn't technology. It wasn't adoption. It was ambiguity. No clear rules, no unified legal framework, just belief versus fear. And markets hate uncertainty, but they exploit it too. This week, U.S. senators introduced a long-awaited bill to define clear rules for the crypto market. Not a ban, not a crackdown, a framework. And that single word matters more than most price movements. Because institutional money doesn't fear volatility. It fears undefined risk. Regulation doesn't mean safety. It means predictability. And predictability changes behavior. Bitcoin rose modestly after the news, but focusing on the price misses the point. This isn't about a pump. It's about a shift in incentives. When rules are unclear, only the bold or reckless participate. When rules become defined, cautious capital enters. Pension funds, institutions, long-term allocators, not chasing upside, managing risk. In 2025 alone, over $17 billion were lost to crypto scams. Not amateurs, not fools, engineers, professionals. Experienced investors. Why? Because narratives create blind spots. Decentralized means safe. Innovation means progress. Early means smarter. Those beliefs override caution, and markets punish belief faster than ignorance. Here's the psychological trap. People hear regulation and think bull run. But regulation doesn't create value. It redistributes risk. Some players gain access, others lose advantage. What worked in chaos doesn't always work in structure, and every market transition produces winners who adapt and losers who cling to the old story. Bitcoin today isn't euphoric, and that's important. It's consolidating, waiting. Markets are watching lawmakers, not charts. This is not 2017. This is not 2021. This is a maturity test. And mature markets don't reward hype. They reward understanding. The real question isn't, will Bitcoin go up? It's, will you recognize when the rules of the game have changed? Or will you keep playing the old strategy in a new market? Because history is clear. Most people don't lose money because they're wrong. They lose money because they're late. Bitcoin doesn't care what you believe. Markets don't reward conviction. They reward clarity. And whenever narratives shift, your psychology decides the outcome.
Thank you for watching. If this story resonated with you, you'll find additional resources and learning material linked in the description. They go deeper into how these psychological biases shape real financial decisions and how to avoid repeating the same mistakes. I'll see you in the next episode.